Good morning. I'm Vince Lancy. It's 7:51 Tuesday morning after Memorial Day. I hope everyone had a good weekend. There's our homepage. A lot of stories went up over the weekend, mostly bricks oriented with some gold and silver commentary as well. Let's see what we're talking about today. We're talking about, oh, there we are. Ushering in a new nuclear age. Uh, President Trump signed an executive order on Friday, and it promptly was the catalyst for nuclear stocks to go ballistic. Um, Uranium production as well as nuclear energy. So we're going to cover that. Let's look at the markets first. 10-year yields are down 3 at 447. The dollar is 99.36, up 43. Impressive, but more the norm than usual. SPX 500 58.88, up a moderate 10. The VIX is 20.37, holding firm, down 19. Gold shellacked a little bit, 32.89, down 52 after a massive rally on Friday. Silver 32.88, down 53. That negates my buy signal. Copper 471, down 8. Well, that explains it. WTI 61.54, down 38. Somebody wake Shanghai up. Those people are not doing their job. Nat gas 336, up 2. Bitcoin doing well, 109,000, up 50, up a little bit. Palladium 976, down 13. Platinum 1073, down 15. Gold, silver 99.98. Soybeans, corn, wheat. Soybeans are up 5.5. Corn unchanged offer, and wheat down 8. You can see them on the screen. China stocks are up. Well, Hong Kong is up. Let's put it that way. I think Hong Kong was just upgraded by Moody's. Yeah, Hong Kong's safer than we are now. Okay, so ushering in a new nuclear age. There we go. On Friday, Trump signs an executive order to boost nuclear sector, and Goldman reaffirmed CCJ buy and other companies. President Trump has signed an executive order invoking the Defense Production Act to address U.S. reliance on enriched uranium and nuclear supply chain inputs from China and Russia. The action declares a national emergency and directs federal agencies to streamline permitting, designate federal lands for reactor sites, and activate the Department of Energy's Loan Program Office. That's key to finance reactor construction. That's putting the money where the mouth is. And there's part one, a new nuclear age emerges. That's our post. Goldman Sachs maintains a constructive outlook on the nuclear sector and reiterated its buy rating on uranium producer Cameco. We've been sharing their coverage of that for about a year now when they initiated, citing upside from expanded fuel demand and a potential acceleration in reactor builds. The bank views Cameco's 49% stake in Westinghouse as a near-term beneficiary should AP1000 designs be adopted for new reactors. Continuing on, you start to see a quote there. It says, "We maintain a constructive view on the nuclear opportunity, both near to medium term for fuel supply and long term for deployment." Goldman Sachs analyst wrote. There's a graphic that we put together showing the breakdown of what President Trump did. The policy action invokes Defense Production Act. That is, the beneficiary is the U.S. uranium miners. Streamlines reactor permitting and siting. That benefits Westinghouse, AP1000 builds. Federal land for builds via the DOE and DOD. That's SMR developers, potentially. It's probably not going to be the fast track thing here, okay? They usually go with what's already permitted before they start. They build out what they have. Loan Program Office to deploy capital, that's the big one. Civil and defense power infrastructure contractors. Why is it the big one? Well, obviously for the stocks, but I'll share a little something with you. When you have a government that has a mandate to rebuild, to manufacture, it needs to allocate money, and it can only allocate money. Congress will only allocate money and say yes to the spending if the project is shovel ready. That's a very important term. If a project is shovel ready, it gets the money. And who is always shovel ready in the United States of America? The military. So if you think the military is going to get cut back on spending, you're out of your mind. Okay. The military is shovel ready. They will subcontract it to other companies, and those companies will benefit. That's how it works. The executive order may also benefit small modular reactor developers in additional loan allocations, if additional loan allocations are directed towards civilian and defense applications. They will be. Keep your eye on Elon Musk. Goldman remains neutral on SMR Incorporated, but highlights upside tied to federal loan support and streamlined licensing. So I guess if you're going to put a portfolio of this stuff together, you throw like a 10 delta, it'd be like buying a 5 delta or a 10 delta call to buy those. The bank's recently published investor roadmap for gaining leverage to the nuclear theme highlights 14 stocks across the bank's coverage. That's a hat tip to Zero Hedge. They have a nice premium article on that, including Mirion Technologies, Mitsubishi Heavy Technologies, and Southern Company. We will have our own take on this broken out along with the uranium market in the coming days at Goldfix. Finally, to give you a little taste of what happened, the bank's recently published investor roadmap. Forget it. Did I say that already? All right. Well, here's the chart. Here's the chart. Here's an example. On the left, that's the Sprott Uranium ETF. So uranium miners, I believe. I don't think it's nuclear itself. And you can see they had a nice trend higher. And then you have a gap higher on Friday. Then if you move over to the uranium, not just uranium producers, but the vertically integrated nuclear companies like Cameco, you can see they also gapped higher. And if you see the little orange dot up there, that's where the market is called today. So they're coming in higher again as well, it seems. Those are representative of how the industry goes. So your uranium producers, your vertically integrated companies gapped higher and were strong all day. Your ETFs gapped higher and were a little bit less strong. And then your SMR types, they were firm but did not gap higher. We'll see what happens now. By the way, when you see markets gap like this in some companies and not the others, it doesn't mean the other companies aren't good. It means the big banks are covering those companies and their clients bought them. When I was at Lehman years ago, they had something called the Lehman 10, oh geez, I forget what it was. Lehman 10 rare rare values. And when that list came out, it was a storm back in the day. That was one of the few things that Lehman had on the equity side that was just phenomenal. Anyway, that's how traders look at things. So there you go. That's an example of that. Oklo is another one. We had Oklo, sold it way too soon. Sorry about that. Speaking to myself. Coming soon this week on Goldfix, the big bill tells. Now, we promised that at the end of the week last week, but we had so much over the weekend. We think the US dollar must weaken further based on some analysis David Stockman did, based on some analysis we read by Goldman, talking about basically if you're not going to cut back on spending, which this big, beautiful bill tells us, well, you're going to weaken the dollar. One way or another, the dollar gets weaker. Part 2 of our 3-part series, modeling uranium, the demand and supply metrics, and how banks will be looking at modeling uranium going further. So, for example, most people, myself included, will say to you that there isn't really a lot of uranium in the cost basis. So the price of uranium can be very, the demand will be very inelastic. They'll just buy it, right? But there's newer technology coming on, and that newer technology will change the metric a little bit, worth reading. And then, of course, Goldman's nuclear stock pick breakdown, CCJ, Miriam, a bunch of other stocks, but CCJ is the one that matters most, and probably Oklo is probably up there as well for a slightly different reason. And then we have something we've been working on for a while, but we've been holding off on it. We expected it to catch on, and then we would write about it and make it public, but no one talked about it, so we'll just put it out there. And that is the China insurance company industry, which has been capped at 1% of gold purchases. That's not a cap, that's a mandate. They got to get it done. The BRICS event is coming up. All right, speaking of the BRICS event, we put out a ton of posts over the weekend. The reason we did that is we had the information, we had the material, and we decided, well, we think we're better, but we're going to be first as well. And then you can use it as a reference point when all the bullshit comes out, and you can start reading it, and you can see how right or wrong we were. Founders preview, that's the first piece, the BRICS 2025 Summit, that's comprehensive. BRICS 2025, China builds global gold vault network. That was really popular. And I think it kind of struck a nerve excuse me, I think it kind of struck a nerve. I think it kind of captured the imagination of really what they're doing. They bought the gold. They need to internationalize the yuan. They seeded the world with yuan contracts, and now they're taking the gold out of Shanghai and seeding the world with gold vaults. I think it's a very important aspect of it, and we did release it first for that reason. The BRICS 2025 de-dollarization endgame, that's the full-blown long-form piece. Gold, silver, and Bitcoin analysis. That's really a HeartNet report masking as a gold, silver, and Bitcoin analysis. The first third of it is our take on the markets. We told you we actually share what our positions were. Long gold and hedged. We sold calls against our positions, so we're not crying too much today. We're happy we did it. Long silver and not hedged, we're crying, but it's a small cry because we know silver can be very volatile and we're committed. We're going to stay long on that, but we have our money committed to it. So it's not like we're going to lose more money. It's an option. And then Founders Part 1, a new nuclear age emerges, the more longer comprehensive piece. Okay, so that's what we put out over the weekend. So in between hamburgers and beers. Data on deck for Tuesday. This is PCE week, 4 a.m. Rocket scientist Neil Kashkari had a speech in Tokyo and said amazing things like, we're going to hold rates steady in an uncertain time. Captivating stuff. Thanks, Neil. Durable goods orders are in April today at 8:30, and we have other things. We got Core Logic, the Case-Shiller Home Price Index, and consumer confidence is at 10. And then New York Fed president. Everyone's talking in Japan. They must be over there having sushi and telling them, please stop selling treasuries. That's probably what's going on. There's the rest of the data on deck. Let's do a summary and final market check. Starting with gold. Well, there you have it. It hit that line, the line that I said really isn't that important, and apparently it rejected it. So if you want to decompress and manage your own expectations, I would like you to think like me, if you want to think like me. Readjust your expectations to we are in a range. So this is the range, those two yellow lines, and this other line, that line is working again. That was where it was capped before. So we're in the middle of the range. So 3290 is where I consider the middle of the range right now between those two lines. And that's the way it is. Now, to make it a little bit less depressing, we've had a great run and we're still going to have a great run. And here's one of the things that I did notice over the weekend in our CFTC report, which will be coming out today or tomorrow, a 2-hour discussion. During that 2-hour discussion, we covered many topics. But one of the topics we covered was the bullion banks who had been on strike, who had been, I believe, in liquidation mode, who I believe had been told by the LBMA, the COMEX, and the BIS to get out of their positions. And that's why we rallied so much. I believe they're back in business now and they're permitted to make markets again for a limited time, or for limited volume. Let's see. In the meantime, on the West, a Western rally, as one of our founders said it. We're looking for a Western rally, and the Western investor is not returning. Now, the ETF buyers are there. They're in and out, in and out, in and out like that. But the speculative demand is not there. And that goes to the point we made before that the COMEX has been possibly irreparably damaged by the lack of professionalism and custodial responsibility by the traders in the LBMA. More importantly, the traders are going to do what they're going to do. The regulators who shirk their own responsibility because they have an inherent conflict of interest in their business. It's very sad, frankly. But I'm sure the speculators will return. The question is when and at what price. They've probably found something else to trade right now. Moving on to silver. Silver, deeply disappointing for me, but it's part of the game. It's a trade. I have a Bollinger Band system. I call it a volatility-based system. And the volatility-based system told me to buy it. And I bought it. And now the market is definitely back in there negating this. And so you should assume that we could go as low as 32. All right? We get below 32, my alarm goes off again, and I have to reassess. So the markets are captured. I want to add one thing about this. All the news, I'm going through the scrolling tape this morning, and all the news that I saw, not all, but there was a trend. And it came from various parts of the world and various regulatory jurisdictions. They all said the same thing: slow down. Kashkari, we're going to be slow and careful. Europe, we're going to step back and reassess the tariff thing. Uh, Russia, Putin, I'm going to uh, I'm going to thinking about drawing a plan up for a peace treaty. Netanyahu pushing back. All these things slow down Trump. And when you're dealing with the midterms coming up, if I wanted to beat Trump or not lose to Trump, slow play is rewarding play. His popularity dropped, it went back up, and now they're just waiting for it to go down again. They're hoping stocks go down. These people are sick in the head, but that's bureaucracy. That's how it always happens. I also talked about Bitcoin. Oh, the gold, silver, Bitcoin, that was a Hartnett report, and he had some really interesting points in there, and we went through it as well. We actually found something that we thought we disagreed with, uh, because we think he's probably not telling everything. I think he's probably holding something back. And I think what he's holding back is in his analysis that it's all about Trump's popularity, all of it. So there's Bitcoin. We think above 100,000. Bitcoin has a date with 130,000. So if it's trading 110 right now and the coin flip is 10 lower or 20 higher, well, you're betting on 20 higher. Have a great day. I'm Vince.